So our next question comes from Jeff Z. Jeff says, I've got a question about your advice on cryptocurrency. I currently only have a little bit of exposure in crypto via the GBTC ETF. How do you all feel about the Grayscale ETFs? And would you recommend increasing exposure there or more directly via cryptocurrencies? Or do you think there's a better crypto ETF out there? Would love to hear your perspective. Thanks. I'll kick this one off, Robert. Jeff, I love this question. BTC was like the OG Bitcoin ETF from back in I think it was like even 2018 or 2019. I remember it's been around for a long time. So the thing about GBTC is two things. One, it's not exactly, at least how I remember it, it's not exactly a spot Bitcoin ETF. It's like a futures Bitcoin ETF in the sense that they are not exactly tracking the performance of Bitcoin one-to-one, but instead they're like trading and holding futures contracts, which are like derivatives, and it just all this fancy active management. And because of all that active management, the expense ratio on that ETF is 1.5%, which is egregious, right? So if you're someone who wants to have some Bitcoin exposure in their portfolio, there's a couple ways to do that. The first one is BTCI, which is the NEOS Bitcoin High Income ETF. It's a spot Bitcoin ETF, essentially, that does a covered call option contract strategy that allows you to have direct exposure to Bitcoin while also generating some income in your portfolio. It's got about a 25 to 30% annual yield on it. I hold a bunch of it. I think it's awesome. I also hold another Bitcoin ETF, IBIT. This is the iShares Spot Bitcoin ETF. It is a one-to-one up and down performance relationship with Bitcoin. There's no like sexy strategy around it. You're just get exposure to Bitcoin. And I think the expense ratio on IBIT, which is comparable to GBTC, is 0.25%, which is 1.25% less than GBTC.
I really like that answer. And the only thing I would add is the only ETF I think anyone should own at this point right now would be BTCI. Just because I love NEOS funds, what they're doing, everything is really good about it. Otherwise, in most instances, especially if you're just starting to get into cryptocurrency, I think you just have a public.com account and you start buying the asset directly. Because at the end of the day, it's not like when you're buying Bitcoin, you need anyone to manage it. It's not like the S&P 500 where they have to make decisions based on weighting or any of these other things. You're just buying that individual asset like you would an individual stock. So in my opinion, I don't think it's a good world to be owning the micro strategies and all these other ones like Grayscale and all of this. I think it is better to just own the asset directly. You can do that through public.com. You can do it through Coinbase. And that way, you know what you have the ownership, and you're not paying all these additional fees. So I agree with Austin on this one 100%.
And I want to linger on that for a little bit because, to your point, Robert, a lot of people go out there and they do buy like the micro strategies and they buy these covered call, crazy leverage debt, all these crazy things, thinking that it is a way to, instead of getting a 1-to-1 return, they can get a 5-to-1 return. I can buy MicroStrategy that'll go up a ton. And you are right. There are some situations where MicroStrategy or Coinbase or whatever other I hold Bitcoin mining, whatever stock you can think of here, could outperform Bitcoin in a short period of time. All of these are very speculative trades and gambles, right? You're rolling the dice here, assuming that it will outperform Bitcoin. Whereas Bitcoin itself, just owning 5 to 15% of your portfolio, having some crypto exposure, which we say essentially is Bitcoin, having that in your portfolio for a long period of time will outperform, right? That is what we've been saying for years now. I continue to hold several Bitcoin. Robert, same deal with him. And like, we are just such big proponents that you don't have to overthink this. It doesn't have to be altcoins. It doesn't have to be futures trading. It doesn't have to be what Robert calls an action movie of investing. It really just means, oh yeah, every other week I systematically purchase some Bitcoin to my public account and I forget about it, right? It could be as simple as that.
Yeah, it's just so important for everyone to understand. And Austin just alluded to it. Investing should not be an action sport. It doesn't need to be emotional. It doesn't need to be fancy. So many people, as they're getting started in their investing journeys or in the mid stages, try to get too fancy and too cute with too many different things. And that, to me, is just a recipe for disaster. And that is why we try to lay out the blueprint of what works, what has worked for decades to help everyone understand you don't have to be in the new, latest, greatest, crazy, cockamamie, investment strategy to really, really beat the markets and beat the benchmarks. So I think it's important for everyone to keep that in mind when you're selecting what to invest in.
Here's a fun story before we move on to our next question I want to share about exactly that, Robert. I saw an interview with Warren Buffett that said when he bought his first stock, he was 11 years old, and he bought that first stock in 1944. He bought 3 shares of it for $114 of a total investment back in 1944. He said that that was a bad investment and ended up not working out for him, but if he instead took that $114 and instead invested it into the simple S&P 500 and reinvested his dividends from 1944 to 2024, that $144 would be $400,000. That's not action, sport, anything. That is parking your money in a low-cost index fund that we've been talking about for as long as I can remember now and just letting it ride. $400,000. Now, of course, that's over a period of 80 years. The guy is old as sliced bread, but it's an interesting story to share because it just reminds you that to get outsized returns, you don't always have to be thinking like a John Wick movie.
100%. Yeah, I just see some of the best portfolios I look at are people that invested early in Apple and Amazon and some of those, and they put $5,000 in 20 years ago, and they just didn't touch it. Right now, we live in an age where there's so much information in front of us all day, every day, and so many clickbait headlines that people just let emotion take over. And a lot of times they end up buying high and selling low because they get caught up in that cycle. And that is why I enjoy doing this with you every day, Austin, because making a difference in thousands and thousands of people's lives and giving them the guidance and the understanding to keep the emotion out of it is so important.